Welcome. I'm Randy Pierson, Vice President of Life and Annuities for Gordon Marketing, and I'm sitting here with one of our best marketers, Paul Bechtold. And today, on this episode of Selling Life and Annuities, we're going to be talking about the nuances and when to use IUL versus whole life. Stay tuned. All right, Paul. So, I like to think of myself as an IUL aficionado, right? I own a couple of nice big fat IULs, and I certainly have a bit of an affinity for IUL, but isn't an IUL better than whole life? I mean, you tell me.
Well, like you, Randy,
and therefore shouldn't agents always be selling IUL?
Well, the first thing I like to say is that they're as different as apples and oranges. Like you, I own 2 IULs. So before I started doing a YFB program, I became very enthralled with the IUL because of the characteristics it has, the tax-free nature, all the great things that IULs do, okay? But I say there's different as apples and oranges because we have certain applications where the whole life that we use for the Your Family Bank program makes sense, particularly when we're going to be getting people out of debt. We need guarantees and we have to be able to deliver on a month-by-month, year-by-year basis, right? When we tell somebody that credit card's ready to be paid off, we darn sure better be able to deliver on that, right?
Yeah, absolutely.
Okay. And so one of the quick questions people come back with is, well, don't IULs have guarantees as well? Yeah, they do, but their guarantees are spread out more over the long term. In other words, a lot of those guarantees are retroactive if the policy doesn't perform, whereas the guarantees on whole life are predicated on a as earned, as used basis within the policy.
And, I'm sure you recognize it, but I was being a little bit facetious when I said, isn't IUL better than whole life? Because, as a 30-year veteran in the business, I know that I like to say it's almost like ice cream, right? We like life insurance. We like all life insurance, just like or at least I, like all ice cream. But sometimes I prefer vanilla or chocolate, right? But you make an excellent point on the guarantees. That's the most important thing about the whole life, especially the carriers that we utilize here at Gordon Marketing, and that is the very strong guarantees inherent within the product. And I do want to mention too, if you're a viewer of this video, and this is the first episode of Selling Life and Annuities that you've seen, I would remind you, or certainly let you know, that Paul Bechtold spearheads our most successful program ever called Your Family Bank, and we utilize those guarantees, as Paul alluded to help agents pay off debt faster than they ever could, utilizing the guarantees inherent in a whole life product.
Right.
And now, with that understanding, and in light of the fact that you manage that program and it's so successful, when might you use an IUL versus a whole life?
Okay, so I want to circle back to one thing you said earlier, isn't it better than the other? There is a mindset amongst agents that the whole life is kind of the old school, old style of product, and that things have given way to the IUL, and it's the stepped up version. It's the more dynamic cousin to the whole life. Okay, that is not the case. There's different as apples and oranges, as we said, and when we have people that we run into maybe that don't have debt, they don't have the need for that guarantee on a month-by-month or year-by-year basis, then we would want to take advantage of the characteristics of a higher upside market potential, even potentially uncapped strategies where that market goes up, we can capture that. But we still have no worse than a zero floor under the worst of circumstances.
And it's really all about meeting the objectives of the client, right? Some clients want that strong upside potential, and others would prefer the warm blanket feel of a safety net of those guarantees. The one thing that I think is very intriguing that most advisors aren't familiar with is the dramatic flexibility in a quality whole life product, especially the ones that we use in the Your Family Bank program, that replicate or certainly are comparable to the flexibility we have in a very quality IUL policy, right?
You make an excellent point. It used to be that the drawback to the whole life policy is it was very stiff and stagnant, right? Your premium got paid in, part of it went to the cost of insurance, the rest went to the cash account, and there wasn't much manipulation to those policies. Now with the product features and structures that we have in place and the modifications by the carriers to adopt to the need of the consumer, we can replicate a lot of the characteristics of a really strong IUL and have the same characteristics so you can get the best of all those worlds.
Yeah, and the warm blanket feel of those guarantees, right? So, you know, I think the important takeaways for advisors watching this video is that, you know, there are very strong and unique features about the most popular product being sold in the life insurance industry today, that being indexed universal life. But newer versions of guaranteed dividend-paying whole life insurance can be equally as flexible and eminently effective in certain planning situations, particularly like paying off debt through the Your Family Bank program. So, Liz and Paul, thank you for being here on this video, talking about the differences of whole life and IUL. And if you're an advisor out there and you'd like to learn more about some of the product information that we discussed today, or you want to learn more about the Your Family Bank program, please reach out to Paul Bechtold, our Your Family Bank manager, or you can always call me, Randy Pierson, at the office. I'm at extension 326. Or visit our website at www.gordonmarketing.com. I want to thank you for watching this episode of Selling Life and Annuities. Tune in every Tuesday. Be sure you click subscribe down below and also click that notification bell so when we send out new content, you'll be notified. And once again, thank you very much for watching this episode of Selling Life and Annuities.